one of the things that you may want to do with financial statements is to use them to compare different companies. But this is not possible to, it's not possible to directly compare financial statements of different companies because they may have different sizes, right? Even if you want to compare a company in different points of time, this is also almost not possible to use directly financial statements. The reason is because, again, the size of the firm may have changed over years, right? Maybe different at different points of time. Um, or let's make it more difficult, how you want to compare, for example, two companies operating in two different countries with two different currencies. For example, Toyota in Japan and Produa in Malaysia. How you want to compare these two companies using their financial statements, because the size of the companies are different and also they are using different currencies to report the to prepare the financial statements. So how to solve this issue, because this is one of the most common things that you may want to do in finance as an investor or as a financial manager. You may want to compare different companies, or you may want to compare a company at different points of time. But of course, if you want to compare two different companies, they should be similar. They should be similar in terms of the industry sector. Okay, so how to do this? How to use financial statements to compare two companies? To do so, you need to standardize the financial statements. Means the unit of analysis should be the same. Means they should be on the same scale, right? So one of the very common methods to do this is actually to report everything, to convert everything into percentage instead of US dollar. So we call this type of financial statements, these revised financial statements, common size statements. So for example, if it's a balance sheet, we name it common size balance sheet. If it's an income statement, we name it common size income statement. So how to standardize how to prepare a common size statements? We divide it by something. For example, for balance sheet, you may divide all items that you saw in balance sheet by total assets. So everything will be reported and will be a percentage of total assets, right, in balance sheet. For income statement, you may divide everything by total sales, right? And you standardize, or let's say you report everything in percentage instead of US dollar. So everything in income statement will be a percentage of total sales, right? So let's have a look at standardized. So this is a standardized income statement, and as you can see, everything has been reported as a percentage of total sales. So as you can see, for example, for every $1 in sales, here, for every $1 in sale, we have 15.7 cent net income, right? So this company can make 15.7 cents net income for $1 in sales, right? Or so now you can compare different companies, right? So maybe you can see which company is doing better, right, in terms of converting sales into net income, right? Because net income is important for the company. Or another one, something interesting here is cost of goods sold. So for $1 in sale, you have 58 cent, almost 58 cent in cost of goods sold, right? So this is important in cost control for companies. So you can compare two different companies, or you can compare the same company at two different points of time to see how efficiently they are doing, for example, cost control, right? Or what else you can see here? Another example. the interest paid for $1 in sales, you have 6 cents in interest. You have to pay 6 cents interest, right? Or for every dollar in sales, you have to pay 8 cent taxes. So another example. So for $1 in sales, this company is paying out 5.2 cents dividend, right? So this is the way we can compare to similar companies, right? So this is called common size method, right? So I showed you common size income statement. The same applies to common size balance sheet as well. So everything, as you can see here, is reported as a percentage of total assets. For example, 2.5% of the total assets is in cash. Or you can have a look at others and compare, for example, balance sheet of this company for 2018 and 2019.